Awesome. So now, what we're gonna do today, we're gonna talk about how to do SIPP and what trading platform is best to use. SIPP is a pension account called, self invested kind of personal pension. So you kind of can manage your own pension yourself, which is some really, really powerful stuff. Yeah. On top of that as well, we also talk about, the trading 212, and then also, what to do when the time comes. So really talk about SIP first. So a lot of people, what you usually have, or what people usually have, they put their SIP into like work pension and stuff like that. It can be Aviva, it can be private pension, it can be anyone. Yeah. So the only situation, or the probably problem with putting your money into Aviva or SIP, or sorry, I mean giving to somebody else. So before the training. So most people will put their money into like SIP, put their money into like other pension, for other pension to do it for them. Yeah. Now the problem, why do we want to convert that into SIP? Because if you have, what's the name of your pension? Do you know the name of the pension?
Zurich.
So you can see the return. Do you know the name
Zurich.
of your, sorry?
Do you know Zurich?
How do you spell that? Sorry? Yeah.
Zurich.
Zurich
That one.
pension. Okay. So if you look at Zurich pension, but there's a lot of pension. Which one you doing? Do you have any
I'm,
clue? Not
I'm just
really.
doing a private pension.
Private pensions. Okay, that's absolutely fine. So if you see, let's say about target retirement pension, let's just give some example. Just give me a second. Let's say UK or actually let's use ChatGPT just to see what's the return of um of your pension like. Look, so this is like something like that, Zurich private pension. Have you got any clue what their return is like, or not really?
No, not really. No.
Okay, so what's the return of what's the return of performance of UK average pension Zurich investment, for example? Yeah. So, or anything, they usually have a standard one. So you can see Zurich Managed Capital Pension Fund, Managed AP Pension Fund, and Pension Fund, all of that. You can see that it depends on which one. Usually it's around 2% to 5%, kind of if you, on average of 10 years time. Okay. Usually it's around that. So you will not see your money grow big time. You will not see, oh, I put 10K my pension today. Tomorrow I get to 20K, or next year I get to 20K. 10 years later I get to 20K. Very, very difficult. If you're 100K, if you're half a million pound, whatever that is very, very unlikely it's going to double. Yeah. And even you take 10, 20, 30 years, even people use their whole lifetime, it's a bit tricky to double. Yeah. So that's kind of what happened. And the advantage of people put their money into the pension so that they can their salary, they sacrifice a little bit of salary, and it goes to their pension tax free. Yeah, they don't have to pay like 20%, 40% tax. So pension is a good thing. It's not a bad thing to do, especially when you are near retirement age, like 50, 60, 70, or even 40. Yeah, it's kind of okay thing to do. So if especially when you have very, very high income, because your tax is already 50%, you might as well just put that into pension. But anyway, so the normal return is around 2%, 3%, 4%. That's like, you know, that's like on average. Yeah. If you look at it carefully, they will not be more than like 5%, 6%, 7%. It's very, very unlikely. Yeah. But if you put into some funds, for example, now this is talking about just about pension. Yeah. So this is we're doing some there are three ways how we're gonna do your trading and investing. So the most reliable way, consistent way of kind of guarantee winning. Okay. I don't really like to use the word guarantee, but there's a way to actually how to make it guarantee. So the guarantee to win is actually you by investing in some index fund. Okay, you invest in some index fund. This is the problem with that is it's a bit slower. So I encourage this when people have more than 100K. Okay, when you have more than 100K in your bank or more than 50K in your bank, this is like guarantee. You do not want to lose your money. You want to be making sure they're always making money. That is kind of what happened. Yeah. And the second way of what we also do is why we invest in individual stocks. We invest in individual stocks. So that's also really, really good way. So if you have less than half a mil, we recommend students to do individual stocks because you grow very, very fast. And number three, what we also do, we use leverage trading. Okay, we use leverage trading, and this is like your spread betting platform. This is like your CFD platform. These are a little bit leverage, okay? So using leverage trading, this is what most people get it wrong. You know, most people get leverage trading, they go all in, they put 100K into leverage trading, 20K, 200K into leverage trading. No. Leverage trading, because there's a risk involved. Yes, you can actually lose money on leverage trading. On these two, on index fund, on stocks, you're gonna eventually gonna make more money. Okay, it's just a matter of time. You buy Meta, you buy Tesla, you buy like Amazon, Apple. Eventually, you're gonna make your money back. It's just about the timing. Okay, these are the two things. Okay, index and individuals. But on leverage spread on CFD and spread betting as well, there's a risk involved because even though you give enough time, the meta will not go up. Because it's leverage. So this is what we recommend. What we recommend is students use so when students have small amount of money, less than like 50K, so you want to make sure at least have 50K profits. You have less than 50K, we actually recommend to do a little bit of this, just to build it up to like to 100K, etc. If someone's have 250 pound, 50 pound, 100 pound, 1,000 pound, whatever that is, we want to have them to have build it up to 100K. Once you have 100K and then you put into individual stocks, you put into index fund, this is a non-leverage. Okay. These are non-leverage. Okay. So that's actually what happens. So when we talk about putting your SIPP, for example, when you put in your SIPP, because these are two guarantee winning, this is what we're going to do. We're going to do your index fund for your SIPP. We're going to invest individual stocks for your SIPP. Okay. Because these are guarantee winning. And we would not do leverage trading, spread betting platform, CFD with your pension um because there's just no point. Again, there's just no point because we have lots of students who have pensions, they're retired and stuff like that. They want to make money risk free, almost guarantee winning. So that's what happened. Although even then, why do we talk about leverage trading, spread betting? That's for students who start with small amount and want to make it big. Yeah, in a proper way. But from pension, you can only do these two amount. Yeah, most people do not know about this. I have to spend a lot of time, a lot of money just to understand this big picture. But so let's come back right now. So once you take your money into so what kind of index funds, for example, and what return would you get? So for example, if I go to index fund like QQQ performance average, let's have a look. For example, you can see in the past 1 year time is 21%. In the past 5 years time is 100% return. So if you have money such as like 50K in 5 years time, you would have made 100% return using what we recommend. Yeah, lots of our students make even more than that. So compared to on any private pension, in 5 years you only make 2% annualized return, 2%. 5 years, 100%. So 5 years, 2% times 5, 10%. So that's not quite a lot. Even these 6%, 30%, 5%, 25%, 6%, none of them will actually be more than this guy. Okay, QQQ. Yeah. So what is actually QQQ? QQQ actually is a basket of technology stocks in the top 100 technology stocks in the US. Yeah, that's what I recommend. And we don't get into that straight away because this is still quite high return. And the next one we were going to be doing is we can also do in the UK, we call it VUAA. Yeah, we call it VUAA. This is like S&P 500 equivalent type. And you will see that even this is also quite nice as well. VUAA. In the past 5 years, it's also around 99%. So that one you can enter straight away. Yeah, that is very, very safe. 5 years, even maximum years, is always going up. World War One, World War Two, no matter what happened, that's always going up big, big time. Yeah. So you can see by doing that itself, you have saved usually is at least £500,000 of your money. Yes, if you put your money into pension, if you put money in your private pension or any pension, if you give it enough time, 5 years, 1 year, a few years, you have lost at least quite a lot. You know, you lost the potential to get half of your money, and compound power, compound interest at the end when you are 50, 60, you actually lost almost £500,000, if not more than the millions. Depends on how much you have in your pension. So really, really powerful stuff. Hardly anyone know this. Yeah. So your question is, oh Raven, what platform should I use for my or the SIPP, the VUAA? There are many platforms out there, and the one we actually recommend something where they don't charge you performance, they don't charge you a percentage, because percentage, it depends on how much you've got. If you have less than 50, normally our students will grow it up to big later on. So when students eventually have 50K to around 100K, you don't want to use something that is charging you by performance, because some of the platform, they literally charge 1%, half a percent. 1% of the whole 100K is still quite a lot. Yeah. So there's this website called freetrade.co.uk. They actually give you .co.uk. They actually give you, what's that called? Completely free, basically. You just pay the £11 a month, so a year is like £100 a year. That's on your pension. If you are if you are doing it with this itself, like your current pension advisors right now, they are actually charging you at least 1 to 5%. Plus, they underperform the market big time. So you are easily losing 80% of your money putting it into any pensions in the UK if you're not doing it by yourself. Yeah. So moving it to SIPP, which is very encouraged by the government in the UK. The SIPP UK, very encouraged by the government in the UK, is, what is a SIPP in the UK? SIPP is a personal investor pension. Decide how your pension is invested, offering many things. Yeah, so that's what I recommend. Just open that one, and
Mhm.
once you open it, transfer your money there, and then we book a one-to-one. We set it up straight away. We choose what to buy, we choose what stocks to sell, so that you don't have to go onto the blind and not knowing what you're doing. Yeah, so call them, and then you register these first, and then
Mhm.
transfer, so that we can do it together. Yeah, there's couple of options out there, but this is okay. Yeah. So, talking about, so what will we invest in later on? We will be investing, depends on how much is that, we will be investing in your index. Yeah. And if it is small, if your pension is super small, then we will do some individual stocks to make it properly big. Yeah. Because you can see, where are we? You can see if you have invested in, okay, let's go to screener. We talk about our five babies. You can see if we invested in, let's say, the US, choose the right sectors. We just want technology and communication. The growth we want, if you remember, is around, oops, what happened? The growth that we want, if you remember, we want at least like 30%, 40% is okay. At least it's more than 30. And if you choose like that, the EPS, we've done it, revenue, we want it to be, let's say, more than 30s as well. I think that's about it. Yeah, so you have 24 companies, still quite a lot in this situation. It's not really accurate here, but you can see if you choose the right companies, you can see you can make 1,000% in return in 12 months, 300% return, Credo 266%. So if you have £100, if you put in 12 months, £100 would have become £266. If you put £100,000 in your pension, would become 266. If you put £1 million, you will become £2.6 million in your pension, just like that. Yeah. So we're gonna choose some of these. This is what we're actually gonna do during exchange fears time. Yeah. So that's what happens. So if you do this, usually index fund, you will have at least Using the right way, you have at least 20 to 30%, sometimes even 40% return. We look at it just now. The return for 1 year is around 5 years, around 20%, 100% to 20% return to 40% return like that. Yeah, I'm using the right one. And then individual stocks, yep, with individual stocks, given that you know when to enter, which is 10% when market undervalue, when market crash and stuff like that happen. So with that, you will make rather than 20 to 30%, you will make 100 to 600%, 500% return in a year time. Okay, so we normally recommend this only when students amount is very small and they want to grow to a proper big way. Yeah, not really leverage. Yeah, so that should answer your first question about does it make sense?
Yeah, 100%. Yeah, because yeah, when they asked me what SIPP provider do you want to transfer it to, I have no idea what
What's
they're
the
talking
what?
about.
Okay, what's the
And what
platform? Okay.
Yeah, no, when I spoke to them, they go, "Well, which SIP provider do you want to transfer to?" I didn't really have an idea of about SIP providers, so I was kind of a bit lost, and so I said, I'll call them back." And yeah, that's the reason for the call today, just to discuss this and understand it.
Nice. Awesome. Awesome. Really good. Yeah. So
No,
well
thanks.
done. Now let's go straight into it for another one right now. Um, let's see. Awesome. Cool. So yeah, how do you feel about this?
Yeah. I feel confident. I'll open an account with freetrade.co.uk, get my pension transferred over, and then,
Yeah.
like you said, we'll book a call and
Yeah, and do it together. Yeah. Well,
mm,
once you
mm,
once you transfer, once the cash is in your
mm,
thing.
mm,
Yep. Cool.
yeah.
So yeah, that's the first question. The second question that you asked was what platform should you be using
Mhm.
when we are doing that? Let me have a look. Let me see. Yep, I think your question is, yep, the free trading 212 and stuff like that. Let me just recap what you just wrote there. Execution plan, buying and selling using stop loss. Cool. So at this moment in time, you don't need stop losses. Okay,
Mhm.
you don't need stop losses at this moment in time. Okay,
Okay.
and yeah, yeah, at this moment in time, you don't need any stop losses
Okay.
because let me see, using stocks. Okay, let me just explain a little bit. So when we do index fund, we don't do
Yeah.
stop loss, we don't do stop losses, okay?
Mhm.
Limits and stuff like that. When you do first one, individual stocks as well, we actually don't use that as well. We don't use stock, we don't use non-leverage. If it's non-leverage platform, we don't use stock, we don't use limit, okay? Because it's non-leverage platform. But the leverage platform one, you leverage platform is like you can make a lot of money, but you can also kind of lose money as well. So because of that, we only get into leverage trades when you are really, really sure you're going to get it right. So that means I personally only use leverage trade when the market are 10% undervalue, okay, which is on the market there, the website. I only use that when the put and call ratio is right at the top, when the volatility index is at the top as well. We talked about this before on our previous training. So basically, it has to be at the top. Really, really think that market is about to turn, then I will do a leverage trading just to buy. Okay. And yeah, so just to buy, I will also, make sure the volume spikes as well. Make sure there's a volume spike. And then I will get in there like that. Yeah. So
Mhm.
this is where I will use leverage. And I will
Mhm.
also use leverage when I ask you to use it, basically. So you don't just go bottom trade and then you use leverage trade and you have nothing to do. You just click leverage trade like that. No, yeah, because as you can see, the return that we talked about just now, if you got in with let's say just £1,000 or £500, whatever that is, just make it easier. If you just in 1K,
Mhm.
if you use a normal, most people just do an index fund, but they choose the wrong currency. So they make around 20%. So at the end of the 1 year, they make 10. 1,200. Okay. That's what happened at the end of the so that's the first way, index fund. That's hence we don't recommend students to do index fund if they're very, very small amount. And the second part is when you do individual stocks, you times six, times 10. Why times six? Why times 10? Because if you look at here, it's times 1,000, times three, times two, times two. So just to make it easier, times six, times five, you will also have around 700, 7K just like that. Yeah, in a year. If you times six, times seven, 7 to 600K like that. Yeah. So if you use leverage, for example, then it's good. And if you use leverage, you start with very small amount, you will times six, but you also times around 10. Sometimes eToro give you 20. On the option trading platform, it give you plus 100. So 1,000 times 6 times 10, you would have made £60,000 just like that. So this is why once you got that, you can see how it doubles straight away. Do it another year, you double, you times 60 again the next year. But once you get to a certain point, once you get to 100K, we don't recommend to use leverage anymore. You just use a normal platform, the normal share dealing platform. So you make money in a guarantee way once you have 100K saved up. Make sense? Yeah. So some students remortgage, some students sell their house, some students, have like more than 100K. We recommend the times six method because 100K times six, you still have 500,000. So that's still quite a lot. You don't have to times 60 with 100K. Yeah. It's going to be very tricky if you times 60 with 100K. Let me just be
Mhm.
clear what I just said to you. Are you clear what I just said to you?
Yeah, so that times six, what's that? Is
Let's
that
do it
spread
again, yeah?
betting?
So the
Yeah.
first step is the index fund way where you times 20%, just the right here. Okay, we talked about that just now, yeah? The
Mhm.
20%. So 1K, 20%, a year later, you have 1,200. You
Yep.
only do this when you have like big amount of money already, 500,000, 100,000, then you can do the normal index fund. Most people beginner mistake is that they put all your money into index fund straight away. That's fine. But it's just that you wouldn't gonna take 10 to 20 years to see result. That's a bit slow, okay? The second way of what we do individual stocks, really, really powerful individual stocks using our multi-bagger strategy. So 1K, if we individual stock, you will have times six, usually, times six or times five of your return. Okay. If you buy like Credo, if you buy Palantir, if you buy Aaron, if I show
Mhm.
you Aaron,
Mhm.
Aaron, oops. Anyway, let me type Aaron LTD stock. Yeah, if you buy Iran stock, like what we recommend, you can see 1 year ago, year to date. Where are we? There is. Yeah, 1 year ago from there, from around 11, it went all the way to like, to seven. 11 to seven is around, six times. 11 to seven, around 6 to 7 times your money. Yeah. So just to make it safe there, we call it times six, times five, something like that. Yeah. So let's do it again. So 1K, the first index fund, you use 20%, so you get 1,200. Is that clear for this one first? Yeah?
Yeah, for index fund, yeah.
Yeah. So this is a normal way. And the second way, you do individual stocks. So individual stocks, the return varies, but it will be way more than that. So this is just 20%, less than 20% or even 10% on index fund. But on individual stocks, you can make 100% to around 700% non-leverage like that. Okay. So with £1,000, with 700% or 500% return, you have made 5K or 6K just like that. Okay. That's a normal way. You times five basically. Or why times five? Because the return times five as well. On Iran, it went from 11 to 77. So it times seven. But I want to make it average. I want to make it easier for you. Yeah, times five. Anyway, so oops. And then the third one is a leverage. Leverage, you will continue times five, but leverage platform, it allows you to times 10 or times five or times 20. That's the leverage that the spread betting platform or CFD platform allows you to use. If you use option trading, you times 100. Okay. So that means that the first one you have 1,200. The second one you have times 10, 1K times 6, you will have times 5, you have 5,000. And then the next one you have 50,000. Okay. These are all starting with 1K, for example. Now, this is just one time. And then what about you do the second time? And then when you do the second time, you times again. This one you times 20% again. This is the next year. And then this times 5x, you times 5x again. You bet 25K just like that. And then 50, you will times what is that? 50 you times 50 again, basically. 50K times 50 again. You make 250K in 2 years' time. That's how our students sharing the testimony like that. Yeah, starting with 1K. So starting with small amount, yes, we will be using some leverage. The big amount you can see, we wouldn't be, once you have 1 million, you wouldn't be times five to make it, I mean, you wouldn't times 50 to make it 550 million. Okay? Because there's a point of saturation. We only use leverage when someone has less than, I would say, 100K to 200K or even half a mil. Yeah. So the first two is guarantee winning. I told you just now. This
Hmm.
leverage is not guarantee winning. Most people lost all their money because they use the third way all the time. Because there's a chance you might lose your money because it's okay to lose like 250 pounds, 50 pounds, £1, £2 with leverage because we are starting with small. But once you make big amount already, 100K, 200K, I
Hmm.
don't like to lose money. You understand what I'm saying? So my
Yeah, yeah,
students don't like to lose money as well.
yeah.
So that's kind of happen. Oh, Raymond, what happened if I have 100K then? If you have 100K, you use the second method. We times six as well. We times five of that without leverage. That means it's almost guaranteed we need with 100K, you also make 500,000 in 1 year time. That's a good deal. Would you agree?
Yeah, 100%. Yeah.
Yeah. What do you say?
No, 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 I totally agree. Yeah, that's a good
Yeah,
deal. Yeah.
yeah, yeah, 500K. Yeah, for 100K times five, you can make 100K. But when you have small amount, then we will be
Mm,
using the third one, which is the leverage one.
mm, mhm,
Yeah.
mm. Like Tuesday, like I think the other day you said, oh, short coffee it was.
Yes.
So
With
what I
that,
did, I was,
we have to use this only because you can't
yeah,
actually buy or short coffee on other platform. Yeah. Not
okay,
index, not individual stocks. With that, we are using kind of like that. Okay,
yeah,
we're using a bit of leverage and spread betting and CFD like that. I
okay,
recommend you to open these platforms as well because when the time comes, when market's really, really,
hmm,
undervalued, that's what we're gonna use as well, which is really good.
okay. So what I did, I just went on trader 212. I put, I don't know, £100 in there, and it wasn't, it didn't make the profit that I thought it was making. Is it because I should have used a more leverage account like IG to?
You didn't make the profit that you thought you were.
No, it's just I
Okay, it
think I
depends
put,
on where you start shorting it from. Yeah, it depends on
oh,
where you start shorting it from. If you short it when we ask our, elite students to do it, then you will be seeing a little bit more profits. Let's
yeah,
see on Monday, let's see what happened, and then take a screenshot and we will see kind of what
yeah,
happened. Yeah, because it's just a few days. Remember, this is what I talk about is the times 50.
mm,
It's not in a few days. All of this return that I talk about, it's not a few days return.
yeah, yeah, yeah,
Yeah. So it's
yeah,
just a few days that you are seeing. So if you use that few days, you keep times, so it will become big
yeah.
later on.
Because I
Yeah.
think right now it's at like £2.50 or something like that. So it's silly.
Oh,
But
okay. Okay.
yeah. So I
Yeah, yeah.
thought,
So
oh,
it's a practicing. Yeah, it's at seeing how things is going at the moment. Okay.
yeah.
Okay.
So when you like send a signal moving forward, do I? It's best to use something like IG and then
Yeah, you can use both. You can use IG or CFDs as well. Yeah. Yeah, in order to see some proper profits, you probably need like put like £500 or £1,000, something like
yeah,
that.
yeah,
Because it's only for a few days or few
yeah,
hours. It's too quick. Yeah. So
yeah,
usually, as you said before, pension is like forever. And
yeah,
1 year pension, as I show you just now, 1 year pension is the return for 1 year pension is 1 year pension is like 2% and stuff like that. Yeah, 2 to 3, 4, 5, 5%. That's 1 year. So you put £100, you
yeah,
get £2 back.
yeah,
Okay, that's
yeah,
1 year. That's from
yeah,
pension. And if you do index, if you put hundred
mm,
pound, you get 20% back. You get £20 back. If you do individual stocks, if you put £100, you get £600 back. And yes, if you have small money, we have to use some leverage. This is also a year. The times 50 or whatever the number is, x 50 is a year time. So if I use 100 times 50, you make £5,000. That's in a year.
mhm.
So you
Okay.
divide by 365 days, you know, 5,000 by 365. So let me see, 5,365. So you make 13 pound, 2 pound, 5 pound. That's more like it.
Huh?
That's a day.
Is that right?
That's for days and stuff like that. What do you mean?
No, no, sorry, no, no, no. That's fine. Yeah, I think
Yeah.
it's more. Yeah, I understand the pension bit. I think it's more like if I was just to practice, I wanted to make no a
Yeah, proper
K.
amount. Yeah, yeah, proper amount. But because yeah, definitely. I get where you come from. Yeah.
Yeah,
That is just a warm up for students since their very first live trade. So that's just a warm up so that you know how things kind of goes as well.
yeah. So
Yeah.
if I put like say if like I shorted coffee on the day that you sent the signal, I put it on
Yeah.
IG. I go to what do I go to say CFD?
No, you go to
Probably
spread betting.
spread betting.
Yeah, because
Okay.
spread betting is tax free.
Okay, spread betting.
Yeah.
So I put £100 in, and then I go all in, put all £100. I short the stock,
Yeah.
and that would be all I lose if it went the wrong way. Is that right?
You will lose like 50 pound, you lose like 10 pound, 20 pound because you're
Okay,
not using all of that as well. Yeah. Like probably actually it depends on how you do it as well. Because to a certain point they will close your trade already. So you wouldn't lose like the whole £100. Yeah.
okay, right, right,
Yeah. To
okay,
a certain point they'll close your trades as well. So yeah, if
okay,
you put £100, yeah, if you put £100 depends on your position size. If you use them all,
mm,
and then unless it really goes really, really down, then you probably lose like 50% of your money like that. Yeah.
okay.
So
And
basically,
how?
however much you can make, that's also the same as however much you can lose on the leverage platform. Yeah.
Okay,
So
and
if you
how
see
do
that you
you?
make £2, £3, so when
Yeah,
it's negative, then you should negative £2, £3 as well. You shouldn't be negative the whole £100. No. So it depends on the position size because if I do this, let's say if I go on here,
yeah,
let's say Iris Energy, let's say if I do the minimum size of 0.01, let's say if I click buy, so
yeah,
you can see they need £9. So if I have £1,000, for example, in this account, then, all right, I mean, if I have £100 in that account, it's just gonna take like a few pounds because the maximum they're gonna take is like £9. It's not the maximum they're gonna take, but it's like £9. So let me calculate for you so you kind of got a little bit of clue.
yeah,
So let's do an order now. Let's do I click
hmm
buy now. The
hmm
price level 4690. So if I place a limit order, so there's an order here. So if I click on here, I click all the way to the top. So it's saying that okay, if it goes all the way high up to the top from there, I will make, if I put £10 in as a margin, I will make £30. So you times three of your money in a few days' time, okay, a few weeks' time. And if it goes to zero, which is here, you would
hmm
have lost £39 like that, okay, out of the £10 or £20 or the £100 that you put. So
Okay,
that's that. And that takes a long time for it to go all the way down there.
right,
Yeah. So leverage
okay,
is a bit tricky just because of that. The calculation is also a bit tricky because you really it's count per point. So it really count how much you think it's gonna go to. So for
mhm,
me personally, if I get into this trade, if I buy here, I thought about what's the worst case gonna happen. Okay, let's go to daily chart. I thought about what's the worst case. The worst case is probably it might come all the way down here. So I calculate how much I'm gonna lose. If it comes all the way down here, I need to make sure I have enough money in the account. It might not come down, but if I need to make sure I have enough money in the account. £24, I'll put £24 in that account. If it
mm,
goes up, I make £27. I ask myself, would I be happy with £27? If I would be happy, then I deposit the £10 or whatever that is. Yeah, if I
mm,
want more, then I will change the number to make it a little bit more.
okay. And you can put whatever lot size you want
You
for.
can put a lot size that you want based on what you deposited. Yeah,
Okay, fine. All right.
yeah.
Okay, that's kind of cleared up how I go about putting a trade on or
Yeah.
buying
So I
stock. Yeah.
strongly recommend you, before you
Yeah.
put the trade on, always think about the maximum loss first. and then make sure you
Mm.
have that in your account. Otherwise, the broker is going to close your trade for you. This is
Yeah.
all talking about number three, yeah? Leverage trading,
Yeah.
spread trading,
Mm.
CFD. Hence, there's so many calculation. The first two, there's not really a lot of calculation. You put £10, you buy £10 on this stock, you maximum
Mm.
gonna lose like £5,
Yeah.
50%. But here,
Yeah.
it's a bit of calculation because you always have to thought about the worst case situation
Mm.
before you go in so that you are already saved up. If you don't know the worst case situation, you will be scared. But if you
Mm.
know the worst case, oh, Raven, how do I know what's the worst case situation? The worst case situation is you just thought about, where's the support line, where do you think it's gonna go, or if it goes to zero, if the company go
Mm.
bankrupt. Look, this company, if it goes bankrupt, which is like here, the
Mm.
maximum I'm gonna lose is £34. It's very
Mm.
unlikely for a company to go bankrupt. For Amazon and Tesla, all of these
Mm.
companies to go bankrupt. Very unlikely. But it's nice to calculate the situation where if they go bankrupt, yeah,
Yeah.
or the situation where the strong support line can be at,
Yeah.
it's kind of stop around here. So that's where I put my stop loss and stuff like that. So I need to have the amount of money that I have. How do I know? So if I put 4 6 to 3, 4 6 minus 3 is around 1,600. So if I put 0.01, so you can see that it's around £16. So it's £1 per point on the spread betting platform. Each point as it moves, now it's 4 7. If it moves to 3, I use 4 7 minus 3,000 is 1,600. 1,600 times 0.01. The size here is how many pound per point. This has nothing to do with share. This has nothing to do with this is just how they calculate it.
Mm.
Okay.
Mm.
So you just have to memorize it. So
Yeah.
that's how the calculation kind of comes.
I
So
mean,
when
it's kind of good because they work it out for you, don't they? They work like I'm only going to lose
no,
16
you have
pounds
to do it
40.
yourself. They don't work it out for you. You have to
Oh, so
work it out for yourself.
what's that number then? That 16 pound
I do
47.
it. This is one that I did it. So basically, you have to put an order in.
Yeah.
Once you put an order in, you have to click this, and then you have to go to the bottom and try to see what numbers you want. So you have to like do it, or most platform don't give you this at all. So you have to eyeball it. Or how do you eyeball it? In a week four training, we talk about the position size. The formula for the position size
Mhm.
is the amount that you're willing to lose. Let's say you are willing to lose £5, divide by the stop loss gap. The stop loss gap is if you think 4 6 is gonna go to 3, the stop loss gap is 1,600. So based on the amount that you're willing to lose, you calculate the position size. S stands for size. Yeah.
Mhm.
So I just repeat the formula. Just write it here. Position size is equivalent to um amount willing to lose. That means it's £10, put £10, divide by stop loss gap. Okay? Amount that
Mhm.
you're willing to lose divided by the stop loss gap. And that's about it.
Okay. All right. Yeah. Okay. I'm gonna start using spread betting from now on. I think this
It's easier to calculate. You're right. It's easier to calculate.
because 2-1 it's trading two
Even
one
on
two
212,
sees.
they allow the same thing, but if you look at the limit, they kind of give you a little bit there. So you kind of have to test it a little bit. So let me just
Mm.
give you an example. So you kind of have to test it. Um, how to calculate the uh losses from CFD trading to onto account. If I buy a share at 200 and sell at 300 and share is 10. So let's look at trading to CFD platform. Um, so that's what happened. So in the take profit and the stop loss, let me see. Take profit and stop loss. This is yeah, they don't actually show you clearly. Yeah, but or you can just use spread betting. Yeah, distance calculate. They give you the price, the distance, the result. So they kind of give you a little bit. You kind of have to draw it yourself. They give you a little bit there. How much would it be? How much
Mm.
would that be? But yeah, just use spread betting. Maybe it's a bit easier and it's tax
Yeah.
as well. Yeah.
Okay. All right.
Let me see. So formula XC minus the quantity. So if the buy price is 200, sell price quantity is 10. So let's do an example here. How do you calculate the simple profit and loss of CFD? So the formula is exit minus entry times the quantity. Let's say you buy at 200, you sell at 300. So the difference is 100. You times the number of shares that you bought. Let's say you bought 10 shares, is 1,000 CFD. Yep, just about and the bill
Mm.
of the fees there. The overnight charge fees is like 0.1%. Is quite small. Don't have to care about that. A lot of people stop that just because of that, but it's actually not so big. It's actually quite small. As long as your stock is moving, then it's fine. Yeah, but
That that profit there.
coming to weekend is a bit tricky and it might be a little bit big. Sorry,
All right. No, that profit there, is that using £100 capital? Is that right? How much is that?
what do you mean?
This bit here. Okay, buy 200.
Yeah.
That profit there, £1,000. What's the capital on that? Is that £100 on?
Um. Okay. What's the capital of that? What's the capital of the profit £1,000 of that CFE platform? We don't really use the word capital, kind of like a
Yeah,
margin.
I know.
But let's have a look. Yep, yep, capital. Profit £1,000 of CFD is not the full amount. So what's the margin required? So £400 margin.
Okay. All right.
Yeah. Some volatile use 50%, some use 10%. Okay. Yeah. So that's kind of what happened. Yeah.
Hmm.
Cool. So this is what I strongly recommend. I strongly recommend you to put on some trades as well on spread betting platform, like put on like 50 trades on this platform, demo platform, just to put it on and see kind of how things goes as well. Yeah. Now, have you
Okay.
done your 10 trades, the 10 trades that you really want to do? Do you know
Um,
your 10 trades already? You brought the guide.
so I just watched that video when the call we had with Armin, and I went on FinFiz and
Yep.
had the same plotted
Companies.
graphs as he did. Yeah. So I did exactly what he did, and that video kind of covered all the questions I had.
Awesome.
Uh,
I love that. I love
yeah,
that. Very, very good. So we
yeah,
see with that with that strategy, really, really powerful strategy, you can see that you make, 5 times, 7 times your money,
yeah.
whatever that is. So let's say if we go into one of them is Palantir for that at the moment in time as well. I think this is actually one of them. Lots of our students get on it during the extreme fear at the bottom in April time. Yeah, which is here. It was around six at that moment. Today
Hmm.
it becomes 22. So 6 times 22 is like four, almost four. So
Hmm.
that's so if we have £1,000, you times four of your money. It's around 400% like that. And if you use leverage platform, with four you times 10 as well, you make £40,000 just like that. Cradles as well is also part of the trainings as well. If you do cradle, if it's at the bottom here, at 3, it went all the way to 18 times 6. Again, 18 to like this is like 20, 18, you make it easier. So times 6, 6, £1,000, you make £6,000 just like that. And with some leverage that we talk about, 6 times 10, £60,000. So a lot of our students they just in life they just have to experience between 1 to 2 extreme fears at a really, really nice time. And when the time we go all in, and that's about it. And you are very, very much covered. Yeah.
Yeah,
And
yeah.
yeah, especially for the elite, where we really do a lot of things together, they can book as many sessions as possible together with them as well. And
Mm.
what else we have? Like Robin Hood, also kind of one of them as well. Astera Labs as well. Yeah, Affirms as well. So yeah, so we buy at the extreme fear, we kind of sell at the extreme greed. We talk about if you watch the video that we have with Armin, there are
Yeah,
three criteria to sell a stock. What are the three criteria to sell a stock? The first one is when we're in extreme fear, sorry, extreme greed. So you
yeah.
buy something when you sell. The second one,
Would it be? I don't know. You were talking about a lot about spike in volume. Would you?
Yes, yes. There's a spike in volume. Also a good time to kind of get ready to kind of sell the stocks as well. The change of guidance when it's low, when it's lower, when it's not a surprise, when it's bad, bad, then we also can sell that stocks as well. Or when the markets go overvalue by 6.5% using my website. Yeah.
Yes, right, 6.5. Yeah.
So yeah, so that's kind of what happened. Yeah. So at this moment in time, yeah, for you, your homework right now is just literally just transfer your funds, yeah, to SIP so we can book a session to really buy a lot of them together. And then on top of that, place 50 trades on your IGs so also you can practice a little bit there. And also do the homework where I give you to Armin's as well, where you look at why your stocks, the 10 babies that you do the other day, why does it drop? Meta dropped in 2022 because they think TikTok is coming in because Apple was changing their phone where they have to ask permission for people to advertise. So it was dropping. TikTok is coming here. So eventually now Meta is all-time high. So you want to know the reason because when you know the reasons why they drop, you can use ChatGPT, you can try your best, you can go to market screener to see or ChatGPT and yeah, so because when you know that reason, life gets very easy. Yeah. It's like why do I get into cattle trade? Why students make money on cattle, on coffee and things like that? Because I back tested it. And Trump, they used to talk about eggs want to come down in prices. And then the price of egg come down 50%. So cattle, I probably think is going to come down 20%. Coffee, because of drought and stuff like that, probably going to be 10%, stuff like that. But on Saturday, on Friday, I think he announced some things as well. So we might have something to see what happened. Just a few hours from now, Monday, we'll see what happened. Because he announced he removes the tariffs already. So usually when people announce the tariffs, the stock is going to come down. I mean, the price is going to come down of the commodities, orange juice, tomato is going to come down if you remove the tariffs because it's cheaper for people to come to the country, the items. But maybe by the new rumors, sell the news, there might be a temporary pullback before it start coming back down and stuff like that. Yeah. First of all, how do you feel so far?
Yeah, great, great. When I transfer it to SIP and then I book another call, do we
Yeah.
start putting pending orders
Yeah. We start
together?
putting pending orders, we start putting trades straight away.
Okay, great, great, excellent. The 50 demo IG trades, just do it randomly, right?
Yeah,
Doesn't.
just do it based on what we told you on the Tuesday call. On the
Yeah.
weekly call, we recommend some trades. Once you recommended that, just put it on as well, so you can see
Mm,
how it actually look like and stuff
mm,
like that.
Okay, great. Okay. Yeah, I think that's you covered what I needed to ask for today. Um,
Nice. How
but
do you feel so far? Overall,
yeah,
the
yeah, yeah. I
journey.
feel
Yeah. Mm.
yeah, I feel very excited. Like you said, you just got to be patient and wait for it to drop to um, is it -6?
Exactly. Exactly. Minus 10.
-10, sorry,
Yeah,
minus
minus
10.
10,
Yeah, 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 yeah,
the
yeah, yeah,
valuation. You can see the Bitcoin, if those people who are not, let me show you Bitcoin for a second. People who are not very patient for Bitcoin, you can see it came back down. It came back to exactly where we were before.
yeah,
So a lot of people keep asking you to buy Bitcoin. Bitcoin went to 100. Okay, it went to 100, or in July
yeah.
time. Everyone's asking, or even in May time, it went to 100. You're like, oh, time to buy Bitcoin in 100 now. July,
Mm,
you buy 100, you buy in 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 100. So for 1 year, it just came back up exactly where you are. So anyone who bought Bitcoin 1 year time, they all lost money, basically. Can you see? In 1 year time, in any crypto
mhm.
actually, anyone bought any crypto this year, starting in June and stuff like that, they all kind of lose money. So being patient is really powerful because when the time comes, I think 80K will be really nice to go all in, and then you can make big money like that. Yeah, stocks is the same as well. Stock is a lot more guaranteed, a lot more reliable. It's just a
Mm.
really, really good way to let your money to work for you. And it's a really true way to achieve financial freedom without working so hard in our jobs. Make sense? What do you do for a living again?
I'm a freelance graphic designer, so
Okay. Okay.
yeah,
Awesome. Yeah.
yeah,
So this is good stuff for you. And yeah, we have lots of students doing that as well. But once you get good, once your money start making you money as well, you
yeah,
you 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 become work independent. You really get to choose what you really, really want to do.
yeah.
Mm. Is
Brilliant.
that is,
Yeah.
is that one of the reasons why you joined the training?
Absolutely, yeah, because I want to be ready for this, what's going to come in the next couple of weeks.
Yeah.
Otherwise you've got to wait till March again. You have to be really patient and wait till March for the next drop. So I just want to be, properly prepared, have
Yeah, it's gonna
the,
yeah, it's gonna happen in a few weeks' time.
yeah,
Potentially with how things is going in. Yeah,
yeah.
awesome,
Thanks,
cool. Yeah,
Raven.
you're welcome. How you feeling overall?
Yeah, excited and I feel great. Yeah.
Nice. So let me know when once you transfer your pension, so we can move your session and transfer like that. All right.
Thank you very much.
You're
Thank you.
welcome. Speak to you